So first of all, whenever you are analyzing your chart, I will prefer you start from the higher time frame, then you scale down to the lower time frame. Where the lower time frame, the least one you can go is the 50 minutes, and the higher time frame, the highest you can go is the weekly time frame. So we want to understand the chart, the overall chart, before you start with your you come and focus on a particular place to take your buy or to take your sell. So by considering weekly time frame, you can see that Euro USD is in a downtrend. What do I mean by that? But overall, it's actually in a bullish market. You see, we have a break of structure here.
Your screen has gone off.
Really? Okay, let me stop sharing. Maybe it's because I started recording and then it went off. Let me stop sharing and share again.
Yeah, now it's okay. It's back.
Can you see?
Yeah, I can see it.
Okay, so we have a break of structure here, and then price used this supply zone or this order block to reverse it after the break of structure. We want to I'm analyzing Euro USD by using multi-time frame, starting from the weekly time frame. You understand?
Yeah.
So this is an order block that price used to take to rally to the top side, and then after that it came to break the previous high. So it is telling us that price is trending up in the higher time frame, bullish. Yes. So now, where has price retraced back to? Since it has broken structure, it is trying to tell us that we are in a bullish market. Yes. So now we want to know where price has gotten to by using Fibonacci retracement. And whenever price retraces to 78 fib level, it is actually a reversal zone. It's actually a reversal point. So it is likely that Euro USD will start shooting up in the near future to break the previous high. You get it? So it's a pullback price.
Yeah.
Let me use this from here to here. It's a pullback because the main swing of the trade is this one. Of the pair is this one, but this is what we call pullback. So we have impulse. This is impulse and this is correction. So it is likely that price can give us another impulse again, but it isn't going to be any moment. Like it's not going to be now. It will take time, unless otherwise you want to do long-term investment. That is where you will buy euro and be keeping it. But if you want to be a day trader or a swing trader, this whole move does not concern you. This whole move doesn't concern you. So at the weekly time frame, using SMC, what I've taught you, using it to analyze at the weekly time frame, this is what is presenting to us. So we will mark here. Here is an order block. Price has used to rally up. Let me check something. You could use this. Let me see. That
block.
Exactly. So it has used the breaker block to rally up, and then this guy. Let me mark it well. This is a breaker block, and this one acted as our inducement. You see, it was supposed to come in after breaking here. It was supposed to come and retest it, but then it couldn't touch the breaker block, and then started rallying up. You get it?
Yeah.
So it's left a space. So this is the inducement, inducement, and now we have it clearly here that price has come back to mitigate that breaker block. And the moment we mitigate breaker block, this other block becomes invalid. We are no more interested in the order block because it has actually given us an inducement here, and the breaker block was the one closest to the inducement. So that is why we have this rally up. So now let's focus on current price. Now at the weekly, we know that Euro USD is bullish, but we are not concerned about. Is that?
Yeah, it's okay now. It's back.
Yeah. So we are not concerned about bearish in the lower time in the higher time frame. We are much concerned about bullish in the higher time frame. So let's start doing current price. So currently we have a break of structure to the downside here. You mark it as a break of structure. We want to build story. So we are using these steps. Advanced SMC. It's either read or close laptop. That's how me I've done it. If I don't read this, I don't make any analysis. So directional bias, you want to know the market structure. So first of all, we have a break of structure.
Your screen has gone.
It is gone again.
Yeah.
This thing.
I do that. On my side, I have my. Yeah, it's back.
Are you sure it's not your internet?
No, my internet is okay. I can even show you.
Can you see it now?
Yeah, I can see it.
Okay. So now we have a break of structure here. This is external break of structure. And then if price comes back to can be able to break this high, then it will confirm the bullish, the weekly time frame bullish we are looking forward to. So if we break this high, then we will have what we call a market structure shift. So and then after the market structure shift, we will wait for something like this and then start to look for a long-term buy. This is weekly time frame, but I will scale down to the lower time frame to get a daily daily trade. So this is it.
You see?
You sent me a message.
I've seen this one. Yeah, your skin is totally black out. I don't know why.
So this is what you are seeing, right?
Yeah, I'm only seeing that.
Okay. Let me stop sharing. Can you see the chart?
Yeah, I can see it now.
So at the weekly time frame, analyzing using our concepts, this is how I will be looking forward to see Euro USD. If it can be able to break this previous high and pull back, that is where I will be interested in the long-term buy, because our confirmation is price has to break. Confirmations for trend reversal is what? To have a change of character or market structure shift. But right now we have a break of structure to the downside here, and the swing side of the break of structure is here, or it could be here. Let me mark here. This is the external swing structure. So if price can be able to come to the top here and come and clear this high and then give us any pullback to the downside, that is when I'll be interested in the long-term buys on Euro USD to this top here, to the top here.
Okay.
Yes. So, and I believe that happens because right now our concept we use here, we have an inducement, a breaker block respected, and what price has to do is to come and clear the top here and then pull back, and then we look for a long-term buy. So now we have an overall picture of the market in our mind. Let's scale down to the lower time frame, which is maybe, let's go to the daily to look for current trade opportunity. So from here, now we are coming to deal with the internal. We have a break of structure to the downside here. A market structure shift here.
Break up look. Okay.
a market structure shift or change of character. Market structure shift here. Then it should tell us that we have actually changed from bearish to bullish, because before price was doing what? Taking high, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, and now we have a higher high. So there is no need to look for sells again.
Yeah.
So we've shifted structure. And let me check something here. So now we want to focus on what is happening here, what has been going on here. So we have, after that, we have a break of structure here, a break of structure to here, another break of structure here. So let me label them. I hope you can still see my screen.
Yeah, it's okay now.
Okay, a break of structure here, a break of structure, and then this one is a break of structure, and also a break of structure here. Have you seen that? So
Yeah, I've seen that.
So price was not supposed to come and break this low. So price coming back to break this low, we have what we call a market structure shift. That our focus now should be shifted to bearish. So we said after having the market structure shift, then your focus all will be bearish. So the first pullback would become the inducement. This is a high time frame analysis, so don't really get confused. This was the first pullback, which becomes what our inducement. So this is the inducement liquidity, is the first pullback after a market structure shift or a break of structure. So let's say you are a swing trader, this becomes your inducement. This high becomes your inducement, so you mark it your inducement. Then this guy here has to be a protected high. Price is not supposed to come and break this previous high under normal circumstances. So then after identifying your inducement, where is the other block that the inducement is protecting, this guy, it becomes the other block. So you mark it. So now you see price came to take it, and then we had this massive sell. Have you seen it?
Yeah.
Okay. So we are building a story. I want us to build a story so that we can actually understand the market that we are in. This is USD. So after price coming to respect that other block to sell down, it has taken this previous low. Have you seen it?
Yeah.
Which
There's a breakup low.
It has taken the low. It's not a breakup block. We are not talking about other blocks and breakup blocks. This is a break of structure.
Market structure. Yeah.
No, you don't understand it well. I said break of structure, which is BOS or BOS. Whenever price break previous low, we call it break of structure. I think we are done with this one already.
Yeah.
Whenever we break lows, we call it break of structure. This is creating series of lower lows. So if this low is broken, it is break of structure.
Break of structure. Yeah.
This one is break of structure because we have broken the support. So it's a break of structure. So I want us to understand the market we are in. So we have a break of structure here, a break of structure to this down side. So then, since we have a break of structure, then our protected high, or the high that price is not supposed to go and break, now becomes this one. So if price has finally broken it, then we have what we call a market structure shift again. We have a market structure shift here. a market structure shift here. So then this low here is now becoming our protected low. That price is not supposed to come and break, so we have it there. So after the break of structure, after the market structure shift, let's look at our left side here, our left hand side. Don't get lost. I want us to understand the market. Break of structure also to the downside here, and then we have a break of structure also here. So you remember that whenever we have a break of structure, price has to come and take the order block or a breaker block. But here we have no order block mitigation. It is only full space. Can you hear me?
Yeah.
So we have a breaker block here left unmitigated. So this low was supposed to come to this, pull back to this, and then sell. But we've not gotten it yet. So now we have order block and a breaker block. So we mark this hole, waiting for price to come and respect. And then this guy, this high, since it was not fully, it wasn't a full pullback, we have this guy as our inducement to this order block. To this order block or breaker block. Let me use the breaker block rather, because price was supposed to mitigate the breaker block. Becomes our inducement here. So whenever price pull back to this in the future, it has to respect here. Exactly. You see the sell now we have. Yeah. So it's as a result of this guy. It's a result of this breaker block. So now we've seen that price has actually respected here. So let's currently focus on the current trend. The current trend. What is the current trend doing? Let's go down to the 4 hours. I hope you are not lost.
Yeah, I'm not lost.
We are using the same concept we've learned to analyze this. We are not using anything else. So this is the current trend we are in now. This from here to the top here is the current trend we are in now. So let's now identify our break of structures. Because the reason why we had this buy here is, first we have a break of structure to this downside. I caught this buy to this point, but I couldn't take it all to the top. We have break of structure to the downside here, break of structure, and then this high was not supposed to be broken. So the moment it got broken, we have what we call what? This exactly. So after a market structure shift, what do you look for?
After a market structure shift, after a market structure shift, you're looking for the high, the order block. That led to the market structure shift.
So and that order block should have what?
Or that order block should have a breaker block, or it's either it will form an inducement.
Yes, so that order block should have an inducement protecting it.
Yeah.
Breaker block and order block, they are the same, but a breaker block, don't always, breaker block is in your mouth. Breaker block is a broken order block. So we have a break of structure to the downside here, a market structure shift. So now we want to identify an inducement. So first of all, this is the steps. So first, identify the directional bias, which is market structure. Is the market structure a market structure shift or a break of structure? So now we have a market structure shift. Second, identify the inducement, and we define inducement as 1, the first pullback after a market structure shift or a break of structure, and 2 is the pullback that caused market structure shift or a break of structure. So let's mark this. The pullback that caused this market structure shift was this one, was this guy. So now becomes what? Inducement. So after identifying that inducement, where can we identify our order block? This was supposed to be our order block, and we will only identify order block when a breaker block has already been mitigated. This was the order block we were supposed to identify. Okay, but it was this trade, it was weekend, and we had a gap in market when the market opened the next day, the next week. But then if you are to use a smaller time frame analysis, you will see that a change of character happened here, because this was an internal change of character or an internal market structure shift. This was because we had a high, a low, a high, a low, and then price came back to break it. But let's say you are using the higher time frame to perform the analysis, and even when the gap happened, price came back again to mitigate. After filling it, it came back to mitigate this order block. So maybe you could have taken your trade here long too. After the gap, you could have taken your trade here and still be in the trade and ride it without hitting a stop loss. You could have used this one. You could have used this order block to take the trade, but that's not what I'm focusing on. So let me remove this. Yes, so we have our inducement and our order block. But if not the gap, this is where I would have taken my trade. So even when the market opened and you had your order block marked here, you could have still taken the trade without hitting stop loss, because price actually respected it, went up here and came back to respect it, and then started moving up. Exactly. So we have a break of structure, a market structure shift, and then we have what we call another break of structure here, a break of structure here. So then this is the demand zone or the order block that formed after the break of structure, before the break of structure, sorry. So it's a pending zone,
yeah.
And from there again, we have what we call the break of structure here, a break of structure there. You see, I think this trade will leave me behind. It should go. I'll not take it. I was looking for a sell here, and I think it has already started. But let it do whatever it wants to do. The market will always be there. So now we have a break of structure here, and also a break of structure again. Break of structure again, and we said what inducement we want after the break of structure. We want to identify we said inducement is the first pullback after a market structure or break of structure. So for this trade, for this break of structure, this was the first pullback. So it's now what our future inducement for this low, for this order block. So whenever price come here, I'll be looking for a buy. So we have first our inducement here, and we still have a break of structure here. And this break of structure, the inducement it gave after the first pullback was this one, was this guy. If I go to the lower time frame, you see it's an inducement. Then it's made use of this breaker block here to buy. Have you seen it?
Yeah.
instead of coming back to take the other block, it made use of the instead of coming to take this other block, it used that breaker block.
Breaker block, yeah. So breaker block are for continuation.
Exactly.
Yeah.
Exactly. So we also have what? A break of structure here again. Have you seen it?
Yeah. The first pullback inducements.
A break of structure here again. Then this low, this is the last low. It's not supposed to be broken. You understand? Because we have a break of structure here.
Yes.
Price should have taken this low to the top. But here lies the case, it has been breached. So what we have to do is, after breaking this low, what do we have?
Inducement.
Come again?
Inducement.
No. We have a break of
Market
structure.
structure.
Yes.
Yeah, market structure.
We have a market structure shift.
Yeah.
So now, this induced. So now, after having this market structure shift, what are we looking for?
We're looking for, after a market structure shift, we're looking for the pullback, and then identify an order block, then wait for the price to retest.
So after identifying a market structure shift, that means our mindset from bullish has now turned to what? Bearish.
Bearish.
So since this one has already been mitigated, let me remove this. The inducement here, I've removed it. So now we want to identify our inducement. We said what? An inducement is the first pullback after a market structure shift. Yes. So which one was the first pullback? This happened to be the first pullback that we had here after a market structure shift. If price if that definition does not work for that for the first time, because see, we have a first pullback here where price was supposed to respect here this other block, but then it refused. If that definition fails, it might be something that was happening. There should be a liquidity. That is why this area got breached. I hit a stop loss here. This trade, I took a buy, a sell to this side. I actually booked some profit, but I actually, let me say, it was break even. I closed some profit here, then I hit some break evens here. Because I realized there are liquidities here. We will get to liquidity. Liquidity is what? Equal highs. Whenever you see a double bottom, it's a liquidity. So there is a liquidity here. Then the second definition works. So you use the first pullback after the first pullback that caused the market structure shift or break of structure. So this was the first pullback that caused the market structure shift, and it has a liquidity line at the top. And then you look for your order block. This is the order block. That is why price is respecting it. So since we've been able to identify our order block, the only thing we will be concerned about is we'll be looking forward to see market structure shift at this zone, and it has actually happened. We have a break of structure, and I will be expecting price to rally to this area. Rally here.
Yeah.
Can you see?
Yeah, I can see it. Yeah.
And since price used this breaker block, I'm not more interested in this other block again. I'm much concerned about this other block. And now we're looking for sales opportunities.
So that's why you said you wanted to take a trade, but it has passed you.
Yes. So let me go down. This is 4 hours. Let's go to the 1 hour. Let's go to the 1 hour. So at the 1 hour, let's refine our order block, because the 4 hours order block was very big. 1 hour to we don't see any clear order block, so we will scale down to 30 minutes or 15 minutes. The strategy is very simple if you understand it and you can follow it. It's just 4 things you are looking at for. 4 steps.
Order block, inducement, break of structure, market structure shift.
Exactly. So currently, if I want to take a trade, let me go to 30 minutes. At the 30 minute, I have yes, you see, price has actually respected the 30 minutes order block here, and all these are liquidity. Equal highs here is full of liquidity. So now it has been respected, and we have a market structure shift. Let me go to 15 minutes. So this is the end of the time frames you will go. We have 15 minutes. We have a higher high, a higher low, a higher high. Sorry, let me start again. A higher high, a higher low, or higher high, higher low, higher high, higher low, higher high, higher low. So we at the 15 minutes, I have a market structure shift over here. This is a low here. This low is supposed to take price up, but then it has been breached. So now I have a break of structure to a downside here. And whenever you have a market structure shift, you have to look for your inducement. And the inducement is the first pullback after a market structure shift. First pullback. This let me identify it here. See something. Okay. This could be the first pullback after a market structure shift. So this is the inducement. And then you identify the order block if it hasn't been mitigated. You see, it's not mitigated yet. It actually made use of this breaker block. So in the near future, I was actually showing interest in taking a sell here, but then after reanalyzing it, I've realized that this is the best zone to take my sell. So I'm no more interested in the sell from this side again. Market structure shift, first pullback, inducement, then you identify your order block. So I have the order block there. So where will be my target? My target, after identifying the market structure shift, the next thing you have to identify is your inducement. So we said inducement is the first pullback after a market structure shift or break of structure. So this is a market structure shift, and we have first pullback here. This is our inducement. The inducement has actually caused the break of structure, and then if price can rally to the top here, I'll be looking forward to sell. So this is now my point of interest on Euro USD. Then I'll target this low because we have a trend line liquidity here. Trend line liquidity. So I'll be interested in something like this to clear all this liquidity.
Might be taking long sales in case it is there.
I'll take the sell like this. So we've not tackled liquidity. We will do it. We will do it before I end the class.
Yeah, because that I was even about to ask you.
We will do it. This is a trend line liquidity I'm using. So this is my target on this trade, and then my stop loss above here.
That will be some nice trade.
So this is a trade.
So usually when you want to swing, you usually use 1 hour or 30 minutes.
When I'm taking a trade,
yeah, like mostly swings.
Mostly it is 15 minutes that I use as my entry zone. If I'm able to identify an order block in the 15 minutes, then it is cool for me. If I'm not able to identify another block and I identify it in the 30 minutes, I use the 30 minutes. And if 30 minutes is not also presenting any other block, then I use the 1 hour. The last time frame I will use to identify other block is 2 hours, and that will be all. So this is the trade I'm looking forward to take on Euro USD. And let's deal with liquidity right now before I end the class. So mostly, if you're able to start your analysis from the higher time frame, it gives you more clarity to know where price is actually heading to. But if you start with the lower time frame, you will be seeing different things altogether.
Let's start with that. For example, if you're trading daily, if you're a day trader,
if you're a day trader, still you have to make use of the higher time frame.
So you're supposed to start with the 1 week.
Yes.
Daily, each and every day.
So let's deal with trend line, liquidity. So liquidity is what it simply means money. Liquidity means money, and on this financial market, it is liquidity that moves the market. It is money that runs the market or that moves the market. So that is why wherever price moves to, it is actually going to grab liquidities. It is going to take more money from one side of the market to run. And types of liquidity, we have trend line liquidity. We have trend line liquidity. We have double bottom. Double bottom and double top. And then we have huge wick rejection. Rejection. So you see it. So the trend line liquidity, we have whenever price is, let's say, trending up, it is creating series of higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. In doing that, people are putting their stop loss below whenever price break this high, and then it pulls back. Someone will buy here, and then the person will put the stop loss here. They will be traders will be putting their stop loss beneath previous highs and previous lows, previous highs and previous lows. So it is actually accumulating money at the bottoms of each swing low whenever it is in a higher move or it is rallying to the top. Can you hear me?
Yes.
So then you join the swings and we have what we call trend line liquidity. So let's say you are in a trade, the moment you see price breaking this trend line and then causing a previous change of breaking the previous low as a change of character, all that you have to do is look for a retracement and then take your order block and then you target the next low. So with this one currently, if price, you see we have 1, 2, 3 touches. If price comes up here to take this inducement, I expect it to come and break here, and then after breaking here it will actually come to the top and take a certain high, or it can decide to go straight. I'm not concerned about that, but the only thing I'm concerned about is I know price will come and clear all this low, all this liquidity.
Yeah.
Yes, so that is a trend line liquidity. That is a trend line liquidity. I'm coming. Let's continue. So this is a trend line liquidity. So it could be a downtrend or an uptrend. So if it's a downtrend, you will see something like this. If it is a downtrend, you see a lower high, a lower low, a lower high, a lower low, a lower high, a lower low. So all you have to do is you use a trend line to join here. The moment you see price breaking this trend line and breaking the previous structure, and after giving you pullback, you know that price will come and clear all your take profits should be at the end of the trend line. That is literally what a trend line liquidity is. So that is how come you trade and you know how to set stop loss and then set take profit. Yes. So let's say you take a buy here, your take profit will be at the end here. That's how it is. Then we have what we called double top and double bottom. Double top and double bottom is also a liquidity. Let's say you have equal lows, something like W. This is a double top. It's a liquidity. Whenever you see something like this, know that it's a liquidity. So you just identify it. And I hope you are taking notes though.
Yeah, I'm writing it down.
Okay. So it's double top is also a liquidity, and then double top and double bottom. Double top is something like M. So the top here is also a liquidity. Then which one again? Huge break rejection. That one I will not want you to actually know it. It's not really, you actually struggle to take trades for you, but then if you can focus on trend line liquidity and double top and double bottom liquidity, that one will be more than enough. Example like this, you see here we have an M. We have the right side of the M and the left side of the M here. So it's a liquidity. The next thing you have to identify is you look for an unmitigated order block. This order block is mitigated by this. So the only order block that is not mitigated is this one. Is this one. Is this one. Then you identify it. So price has come back to mitigate it and it has actually respected it perfectly. So on this chart, we have if price is able to jump from here to here, I'll be looking forward to sell from this side. But nevertheless, if it continues with the sell, which I'm not expecting it to, if it continues like this, I'm not the one who invented the market, so you should just go. Yes.
You know the trade.
Yes. This is what my strategy is telling me to do. It is saying that whenever I see a market structure shift, the first pullback should be my inducement, and after the first pullback I should identify an order block or a breaker block, and this here lies the case. This breaker block has been respected, so my next target is the order block here. So I'm just obeying my rules. You get me? So I can equally set a pending order here, and then since we have trend line up here, I expect price to come and clear all this liquidities lying here, so my take profit will be here. Then overall I actually expect price to come to this zone. But when price clear all this liquidity, it can give pullbacks. That is where I will actually identify, I will reanalyze it again.
Yeah.
Yes. So
okay, for example, in gold, you can also take swings.
Yeah, I can decide to hold the trade till it gets here. It gets to this low. But hey, there is some chances of you losing. We equally have an order block here. It could be that after clearing all this liquidity, price will respect this order block and then start to rally up. Who knows? I'm just obeying my strategy. So my strategy tells me that I should take profit. I should take entry on an order block and breaker block and take profit at liquidity zones. That is what my strategy tells me. So exactly, price is actually trying to break this low. I'm still not taking any trade. Alright, so if price take this swing, if price clear this liquidity, it can actually pull back to the top here and then sell. It can also happen. So I'm just waiting for it here. I'm just waiting for price.
If I can ask, do you have like times that you do take trades, like for example you only take trades in New York session or London session or Asia?
At first I used to, but after actually using this system, I only trade by performing my analysis and then wait for price to come back to my entry. Whenever either it comes in the New York or London session, I just don't care. You get me?
Just take your trade.
Yes. I just don't care.
The move it has made, it's about we to pull back.
Yeah, so I'm just waiting for price to maybe retrace here, and then I'll take a sell. As simple as that. If without it, I'm not doing anything. So now we know liquidity, and I told you liquidity is what moves the market. Simply means money. And if you understand it like that, you'll be okay. We have trend line liquidity, double bottom, double top, and huge wick rejection. But for now, stick to trend line liquidity and double top and double bottom. That's all. And this is the system I'm using. I'm not using any system to trade. This is the system. First, I identify my bias or the direction where the market is going. And you know, in trading, the direction of the market is always your friend. You don't want to do anything otherwise. So if you identify the market structure is consisting of two, which include market structure shifts and break of structure. If you identify a market structure shift, it is trying to tell you that price is reversing from the previous trend to an opposite trend. And then if from there, then you identify break of structures, then it will tell you that price will continue with the trend. That will give you the directional bias. So after identifying your directional bias, the next thing you have to do is to identify your inducement. and you have to know the meaning of the inducement you're identifying. The first pullback after a market structure shift, if it is reversing, then you identify your order block as your point of interest or your POI. If the breaker block is having the inducement closest to it, you take the trade from the breaker block and you ignore the order block, and then you take your profit from a trend line liquidity or a double bottom or double top liquidity. This is the system I'm using. Very simple. If you practice it, it becomes so easy. And the psychology is I should always follow the plan. So any mistake that you make, you pay with money. You pay for every mistake with money. So that should put you on your toes to always follow the system. And stick to risk management. I don't risk more than 5%.
So, for example, let's I was supposed to ask you about risk management. For example, I'm having $100 account. So 5% of $100 is
$100. For $100, you only have to use 0.01. Oh, yeah, 0.01 lot. Because you can't tell me you can perform a good risk management on $100 account. It is only 0.01 you have to be using
for each stop loss. Yeah.
For each stop loss.
Yeah. Like 5% for each trade. For example, in the whole trade, I've seen you placing around three lot size. And then your stop loss is around $500.
Yeah, that was 1% on 50k account.
You did pass the challenge?
I passed the phase 1, but when it got to the phase 2, I made some mistakes and they took it. I made some mistakes. I was actually on the phase 2. I was messing up with the strategy, and I've taken some break to actually how do I say, revive myself and come back. So I got to a point where I thought I was so confident, so I was not sticking to the risk management. You see, whenever one thing I've per my experience, one thing I've realized is whenever you are having a winning streak, you shouldn't be carried away to change anything, because a trade that could have given you
a lot of money.
Is that
a lot of money?
A lot of money. You would take a huge lot size on it. If it gives you a lot of money, you will be so excited. The next one, you would want to take a huge lot size which was more than the previous one, and you'll be like, after all, my strategy really works, so why don't I scale up? Then it will come and clear all your wins. If like that trade you lose, it will clear all your wins and then add up to it. So that was what I was actually, the challenge I was facing during the phase 2. I thought I felt over complacency. I felt like I have it all. How do I put it?
You're a pro now.
Yes. So, and the market will always teach you a lesson if you misbehave. It will teach you a lesson if you misbehave. So I've learned my lessons, and I will start again maybe by the end of maybe latest this month. I want to.
You don't take the one for only one phase, like funding tips?
Oh no. I do 2 phases. I do 2 phases.
Because of the percentage, like
yes.
You have more room to lose it.
Yes. So if you don't stick to your rules, such things are possible happening to you. So that should be a piece of advice to you.
Yeah.
So I think we are done with today's class, and I'll post the recording to the Telegram group, to the YouTube channel. Then if you forget anything, you go and make revisions from there.
Okay.
Yeah. So You're welcome. So, bye bye. And I think we are done. We are done with the system, with this trading, with the class. So what I'll be expecting from you is do more works and be sending them to me to actually identify whether what you are doing is correct or not.
Okay, that with the class itself totally.
Exactly, because what you have to know, maybe the next class will be like trying to teach you the multi-time frame analysis again. Because this is the first time I've taught you something like that. So maybe if we do it again, I will do multi-time frame analysis starting from the weekly, daily to the 4 hours to 15 minutes. Yes. So we are done with today's class. See you next time.